Good morning, everyone. Hope you are well. It's Tuesday, the 10th of February, and welcome to the proptrade.com. We'll have a look at our our trades from last night. We had a lot of short dollar trades last night. We were long gold, we were long a couple of the indices last night as well on our end of day trades. And what else were we doing? On gold as well, we went long as well. That's come a bit squiffy this morning. But anyway, end of day positions, so we're not going to panic about them too much. The Nasdaq and the yen, the two that were short term, which actually the yen's done very well again with short dollar yen, and so the yen dollar's generally been weaker overnight. This is this is the dollar yen chart here. Let me just make my huge head a wee bit small. Don't want to see me that large at this time in the morning. Or somebody was saying the charts look better this size, but I can't get the whole of the chart in there. I'm a bit too big still. Let's make it like that. There we are. That's better. That's charts bigger. So rally we'd seen in dollar yen from the end of January here, sort of petered out last week ahead of the elections in Japan. Couldn't get to that 158 level we'd been talking about. Which we've been talking about as a resistance zone. All of most of last year's this rally to 160 was supposed to happen. It never did, and we turned down again from it on a Friday. So we were short yesterday. It's not Friday, Monday. Yesterday, big engulfing candle yesterday. We've already hit target one this morning, and we're down at 155.50 now. We've taken 60 pips out of this from last night's close. That's our target. So half of that position is closed, and that's still open, and we'll pull the stop loss down a bit. In fact, we have pulled the stop loss. No, we haven't. That's where it was last night. Text style. Let's change it to red whilst I'm here. Just for my eyes more than anything else. So that one's already hit target. The other shorts are not doing quite as well as the dollar yen. But let's have a look through the dollar positions this morning. So Swissy was also short from last night's close. Again, that one's in the money. Sorry, it's not in the money. It's out of the money. It's a big down day yesterday for the dollar. So we got in here at just ahead of close at 67.62. Stop loss up here and target down here 30 pips at 67.35 to start off with. So these are end of day trades. I'm not going to panic too much about these, but obviously 76 is that big low that we hit on the 27th before that last leg up we've seen in here the dollar Swiss on other crosses. CAD was obviously short as well. There's the entry. Again, it's bounced back a bit. I'll need to put all these lines on properly, but we got filled at the end of day around about there. I don't know the actual figure was, but it was round about there. And again, we were looking at about 30 odd pips just ahead of 135, if I remember rightly, 135.60. So it wasn't, it was 30 something it was. That's the other way around. So stop loss would have been up here and target about 30 odd pips here on the euro dollar. So they're all a wee bit out of the money. Euro 119. A big rally again yesterday from this 118 level we were talking about. So we are now halfway between the key 120 and the big support at 118 at 119. We are long for 30 pips to start off with this morning. And again, that's another one that's gone against Aussie, our best performer, 70.65. Again, come back again. So you see the same story. I'll put all these lines in properly later on. I'll update you all later on. The only one that didn't trigger over the major crosses was sterling. Sterling is engulfed in key political turmoil. The Prime Minister under immense pressure. One of his key cabinet members sort of broke ranks last night, a guy called Wes Streeton, the health secretary. A bit of a protege of the disgraced Peter Mandelson. He came out and explained a lot of, or showed a lot of personal emails and communications. They're all a bit strange, to be honest, but politics is a strange business, and Wes Streeton has sort of played his hand a bit. Starmer's a bit of he comes across as a very affable, good guy, but he is a top both politician and lawyer, more importantly. So he's a tough cookie. He knows how to fight if he can get dirty if he needs to. but he's lost two of his main aides. He's had all sorts of problems within his cabinet, people having to resign very close to him as well. And the communications, the policies have, been in line with what they said they were going to do when they got that huge majority some 18 months ago. But obviously the press has been all over them like a rash. And the communication has been terrible, and U-turns all over the place, or what look like U-turns all over this place. So a disaster in politics, and they're far right wing riding very high. The Populist Reform Party can't seem to do any wrong, bizarrely, one-trick ponies. But there we go. So Aussie continuing to bid. So Sterling not in play here. 136.70. It was triggering today, earlier this morning. I looked at my end of day triggers. They do trigger early sometimes, but again, this has come back down. So 136.70 for cable, and Kiwi finally 60.37. Also very much like the others. Dollars come back a bit, but remained very weak over the last 2 or 3 days, as we've seen here. That's all those across. So that's our skin in the game. The other two trades we took last night was long the Nasdaq and long gold and long the S&P. They've all come off a wee bit as well. We just have a quick look at these before we get going and see what the open's looking like. We're 20 minutes ahead of the open. So the Nasdaq, we went long last night, and that's a little bit out of the money as well. Was in the money earlier. It's come back down to our entry point. So that's why we got in last night. 25.70 is a sort of target area. I haven't actually set the target on my trading platform, and stop loss 24.75. So that's flat. It was up. It's now flat. The Nasdaq and the S&P similar setup, 69.92. S&P was up quite strongly yesterday, up 32.5 points, 69.64. We closed last night. I got in at 69.57 here to go long late last night. 9 o'clock, I think it was. Target around about the 7,000 level to start off with. Time to take some off there. Can we get there again? Stop loss a bit tight around about yesterday's low of the day. We'll see if this comes back down, but won't be in this very long. The Nasdaq and the yen were both short-term trades, the more aggressive end-of-day trades. So I might see how the Nasdaq goes later on this morning. And we might be closing that early as well. But the rest of them are all long-term, set and forget, end-of-day trades. But obviously, we still need an eye on them. And the only other position we had out was gold. We went long. I haven't had a gold trade for a long time, but we went long last night. And again, another one that's a little bit out of the money this morning. But again, another set and forget trade. Can we hold 5,000, which is where we got in, I think, 5,012. I think I was filled last night. I'll have to check that again on this, transfer the lines to this chart. But we're long gold, so I'm fully exposed at the moment. So I'll be looking to trim and keep the risk in check. When I'm saying fully exposed, that means I've got 12, I think, positions open. And so I've got as much risk on the table as I want on any particular trading day, because you never know what's coming along. Not a lot planned today from a data point of view. We've got retail sales, delayed retail sales this today, but obviously this week the key data is the delayed non-farm payroll and the CPI that's coming out on Friday. So this is today's calendar. High impact events is only the major US data. If we come down the steps, obviously the medium events apply for today. We've got some employment costs from the United States, and then we go down again and see it's not a great deal going on. Apply. Lots of chat from the central bankers, but not a great deal of market moving members. Anyway, certainly Logan and Hammock aren't going to move the dial on what the Fed are going to do. So major event today is really, I said, this retail sales figures expected, as we said yesterday, a little bit of a dip from last time. But again, these are coloured because they're a couple of days late, aren't they? Oh, no, a month late, the core retail sales. So very backward looking. But obviously it is still, it obviously includes feet on the ground in the shops, as well as obviously the predominantly online sales now. So watch the key core number later on, 1:30 my time, affecting the dollar and the US markets before the cash markets open later. So gold continues to hold up, although we're down a tad on the day. We're back over 5,000. And as we said yesterday, next key resistance, if we can get there, if we can actually hold, key thing is to hold 5,000 and the 50% retracement level of the big sell-off we had at the beginning of the month. So holding 5,000 would be obviously bullish, and next target upside would be that 5,150, where that 61.8 fib level sits of this last very volatile leg. I mean, it's the significance of these levels is a bit lower than normal, what you would argue, given the volatility of the 3-day crash from this incredible rally up. So a lot of that was technical, short squeezing and positions, long positions being squeezed out. But anyway, that's our gold market for today. So let's just pop over to our DAX, which is our short-term trader. We haven't actually got a live position on that, but let's have a look where we would have been on our 5-minute trade. So ahead of the open, our low this morning has been down here. So let's just put that in. That's our pre-market. Our pre-market low is down here today. And our pre-market high has just been hit, interestingly. That goes back to yesterday. That's the beginning of today, the 10th. So that's the range we're looking at. So let's have a look. So what's happening with our mean reverting strategy? Well, we've just had a little short, haven't we? We've got there's a touch of the outside of the Bollinger Band. We've had a nice rally. Again, two simple indicators. Nothing wrong with simplicity, my friends. It works. So moving down here, moving down. We've got a cross. So we'd got out of that short position there quite nice. I love trading the 7 o'clock trades. That's very easy money. Some days there's the touch, there's the confirmation cross. So that we'd have been in here trading this. I would have been, if I'd been trading this, we'd have got in here, taking some profit off here at the Bollinger Band, trailed our stop loss up. So stop loss would have been down here around the turn as we'd started the pre-market low. Interestingly, we just put that in, and off we go. And T2 would have been the touch of the outside of the Bollinger Band. That was still really positive at that point. See, we're in the middle of the stochastics range, the 80 to 20 range. So there's no reason to close it off early. Next candle here at 7:15 hits target. We'll bounce out, so we take a second bite out there. And again, hold your nerve. Although let's just zoom this up a bit. So as I say, there's the second target because we've hit the outside of the Bollinger Band. It's gone to plan there. But what the stochastics telling us? Well, they're still nicely sloped. There's still fresh air between the K and the D line, so we're still looking a bit of positive. There could be still some move in this. We don't know at this point. So we take, instead of taking the other half off, we take, I don't know, say we take 30% off and leave 20% on to wait for the turn and the cross. So we then go up for another 5 minutes. We're still positive. Next candle, big lift up. I might have been panicked out on the end of that one as we moved into the overbought area. See, we're into the white area here, but we haven't, our blue and the line haven't crossed it. We give some back. Now we give a bit more back. So we get out really at this point here. So we miss out this little bit of the top. The other way of doing it sometimes is to get out as soon as it goes red, but you'd have got out early there. And that candle there at 7:30 might take you out again. It's the end of the half hour. So what we're looking for now is a short, and that's what's just happened there. So we are now short. So that was our so our short now, literally a few minutes ago, has been there. that red line there. So our stop loss is now up here to start off with, our pre-market high. We'll see how that goes. Remember, it's 5 minutes. We're running into the open. So do you really want this position open? Let's see if we can run some profit before the open and clean out and wait. I mean, that's the other thing. But our target would be down here. But obviously the veracity of the open, the volume of the open, can whipsaw you out. So just be really careful. So I might just take a few pips off this, few points off this. So if we got in here at 14, 3 or 4 pips, 5 or 6 pips, and I'd be out ahead of the open potentially. But at the moment, we have rolled over and we've got long on that 5-minute candle there. The thing when you're doing manual scalping sometimes, guys, as well, the waiting can seem like forever. So if you want to, obviously, the lower the time frame, the more signals you get, the more noise you'll get as well. So if we looked at this, say on the half down to the 2-minute time frame, you can see the initial touch of the Bollinger Band was out here, so it had been out, but the short position, so that was the last touch there. The gap in the significant gap, you see, it didn't really move away there, So, and this is the problem. So the before we move down, that's the first signal there. If you wanted to wait till it moved out of the overbought area, you could have waited till that point there. But that's your first signal. On the 2-minute chart, as you can see, the 5-minute chart doesn't trigger there till 7:45. The 1-minute chart, the 2-minute chart would have triggered there where you've got the clear, or even that one there where you've got a clearer move. But as you can see, they're still both of them in the money. So what I'd be inclined to do now, or what I normally do, is just whip off a few pips. If I've had this big run here, which we saw in the first 5-minute chart, into the open, because the open can, it's just Tuesday open, it's not a Monday morning open, so we don't perhaps get the volatility you can on a Monday where all the weekend orders have been gobbled up. And there's still overnight orders, stuff from Asia, affecting the DAX. But the trend is still with us, so I'm still happy to run with that. So let's flip back to the 5-minute, and we're a few minutes in. So having got in here at 25.14.72, we're now at 20. Where we are 25. 12. There's only 2 points in that as we bought, but we're still in the money. So you don't want to risk giving it back. Obviously, our stop loss is all the way up there. We're pulling it down now because we're now just above our entry candle. Either the decision's yours. I tend to take it off before the open, but we're still going down. Or you follow the rules. Ignore the fact it's the open, have the stop loss a bit wider, and set your targets as the system would set the target. So target 1 here at the Bollinger Band, and target 2 at the bottom of the Bollinger Band, and a new pre-market low is what this is suggesting, or what this is designed for. But we still haven't rolled over. The momentum hasn't taken us down, but we are moving low, so we're in the money there on the DAX. Has the FTSE done the same thing? Obviously never the same. Interesting volumes there at 7 o'clock on the FTSE, and less movement on the FTSE. So we're still moving up. There's the outside, another outside touch. We've moved away a bit. So again, a weak short. See how we're not overbought, we're not oversold. We're right in the middle of assets. It's a key reason why I don't trade the FTSE on these short-term bases. The Dow and the Nasdaq still sort of function a wee bit around about the European open, but not as effectively because obviously it's the derivative market. But again, buy-in signal there. There really would have got you in on the Dow. Target 1, target 2 hasn't quite got there, so we'd got our stop loss, pulled it up too aggressively. Our stop loss would still be here. Target 1 would have been filled, and we still got 50% open on that one. That's a big up candle, and we haven't managed to move further. So that's half in the money, half open. And the Nasdaq do the same thing. Nasdaq do the same thing as well. So there's our short, and there's our long there at 6:55. So it's always good. I like the 7 to 8 trading time frame. I did well yesterday morning. I haven't actually been trading this morning. I jumped in the shower before I came to see you, so I missed that volume. But let's have a look. 5 minutes to the DAX, and we're still going down. We're bouncing a wee bit, so I might have closed that out. I mean, very short numbers, but you get the theory. That's what we're looking to do, to be short or follow our plan, really. And follow the rules is the most important thing. Follow your process. So we'll leave that for now. Obviously, here's the open trade starting to pucker up here on the DAX, but we're still moving low, so nicely in the money on that one as well. So let's have a look at the other markets. Crypto, Bitcoin, as we said yesterday, stuck at 70, and we're actually gone lower this morning. 68, 69 was breached, and we're at 68,800 down this morning. Yesterday we went as low as 68,200, and the sort of moseying, the meandering around 70,000 since the weekend has remained. So this is Sunday afternoon, Monday into the open on Monday, down on last night, yesterday afternoon. I had a sort of roll higher and a roll low, so very much sideways action over the last day or so for Bitcoin. That 60 low we went to on Thursday, 60,000 low. Finally got some buys there, but we can't break away from 70,000. That remains the story overnight for Bitcoin, remains weighed. Oil's come off again a little bit, or had earlier. It's drifted down, so we had a little perk up last night around about the London fix, the 4 o'clock in my time, and then it drifted into the US close, and it's drifted in the Asian session as well, testing back under 64 earlier, but we're at 64.25 now. Perked up a tad, but again waiting on some key geopolitical resolution, whether it's Ukraine, Russia, the Iranian situation. Obviously, we've got supply data and storage data this week. Private inventories today, official inventories tomorrow in the US from Cushing down in Oklahoma. And there we go. So we were, and so the dollar relatively weak, or very weak yesterday and Friday, and come back a bit this morning. So we've tracked sideways. The biggest moving pair, there's not a lot of going on in the Forex market this morning, as you might expect. There's nothing driving things, but yen is the outstanding mover. And what had been the big risk on pair, Aussie yen, has reversed. So Aussie yen, so major mover this morning. You can call it a major mover. 0.2 of 1%. So Aussie yen's down. Yesterday we went to this what looked like 111. Didn't quite get there yesterday, and we are down. So the yen has built up a bit of head of steam post elections. It was expected to weaken, didn't weaken as much as many expect. There's Monday's candle. I was expecting that risk on rally in the equity markets in Asia, particularly in Japan, where we were up close to 4% yesterday. Didn't really move the dial on the yen as much as one thought. So perhaps some undertones there, and the yen's been strong today across the piece actually. So the key indicator, not that this has changed at all because we're still at all-time highs, aren't we? But it's reacted quite interestingly compared to the landslide election that she won. I was expecting that just to keep moving higher, and moved quite significantly higher yesterday. It didn't. A bit of a doji candle, small-bodied candle, actually testing lower. See the length of the wick from yesterday, testing lower before closing higher on the day, but we are now down today. So the yen is definitely seeing some interest back home in the Asian economies. If we look at the Kiwi, actually, I'm just bringing the yen crosses. Dollar's up and the Canadian dollar's up as well a tad. But if we look at the yen crosses, the Kiwi also interestingly weakened yesterday and again today. So definitely some bid for the yen over in Asian markets, if nothing else. So watch that one. Obviously, the weakness has been going on for weeks and months. But is this the first sign of it? Maybe too early to call that. But the political situation has clarified quite significantly. As I say, it was interesting last week. We were going in the opposite direction. The yen was weakening. Kiwi was up here very significantly on Friday ahead of the election. But interesting, we've ripped some of that out. So these could be rolling over in the foreseeable. Euro. Similarly down to the 2 candle pattern from yesterday and today, so it's across the board. There's the weaker sterling as well, and we looked at the Aussie a minute ago, didn't we? So although these are highs, you can see sterling, for instance, testing into its 20-day moving average again. So watch that one as we go forward this week, and the repercussions of what Takeachi has got to say economically more than anything. So Aussie yen's our biggest mover this morning. It's actually 24.241%. So just I've lost it now. We had it before, didn't we, Aussie yen? But that's where we are on the forex markets this morning. All waiting really tomorrow's non-farm payroll and Friday's PCI data. Obviously, the earnings season continues and at a pace. And we had some numbers this morning from Philips, which were worse than expected. AstraZeneca were better than I expected here in Europe. Salesforce last night in the US announced job cuts, but much less than many were expecting. Many were talking about possibly 10,000. It was a 1,000 job cut from Salesforce. On the political front, Kevin Hassett, one-time potential Fed chair, but too close to Trump for political comfort in the White House, talked about trying to ameliorate the perhaps weak jobs numbers on tomorrow, talking the impact of AI is already kicking in. I think he's jumping the gun a wee bit on that. But the impact of the Trump immigration policy while having a compression effect on the jobs market. So whether that was tempering the media or setting them up for a fall if we do get a strong jobs number tomorrow. But I'll be live for that 1:30 tomorrow, 13:30 for non-farm payroll tomorrow, Wednesday, the 11th. So let's just go back to our DAX trade. Now the open is over at 3 minutes in. That's our DAX position. We're still short. Let's have a look what's happened. Oh, we did the volatility. Oh, no, we braved it. So we got the target 1 and we got the target 2. So the trend, as we just said before, so that would have held our nerve. We got to target 1 from our entry at 7.45 at 24,997. So under the key 25 area, so 17 points at half. And then the next half, or the next 30%, as I said, we keep some of this on. This is the rule because we're continuing lower. So 30% taken off there at 24,958 just now. So that's target 2. And as you can see here, the pre-market low has been burst on our first few minutes of trading. So we're still short. So our stop loss, that was, I can't remember what it was. Is our entry here? No, we said we got in here, didn't we? So that's our entry. Let me change that. So you can see that's green for go. Okay, so green for go. So our entry was here. Our stop loss would have been up here initially, wouldn't it? So we'll pull our stop loss down to our target 1. In fact, we could pull it down a bit tighter than that, couldn't we? Remember, this is scalping. So we've taken off 50% here at target 1. We've taken off another 30% at target 2. Down here at the bottom of the Bollinger Band. So as we hit that, went through we could have had it at the low, but technically it would have been it's programmed here for the bottom of the Bollinger Band. So that's taken that off there. So it's another successful mean reverting start to the DAX day. Trading doesn't have to be complicated, guys. It should be simple. You should understand it, whether it's a mechanical system, whether it's an AE. So we are still short now, as I say, and this is our stop loss now. And I'll put that actually at the pre-market low. So if it does reverse, we're only going to lose 20% of the whole risk on that reversion, having already bagged 50% at T1 and 30% at the second T2 area there. So that was remember we got in here, our initial stop loss was up here, so that was our risk, and we've more than one and a bit, two times risk on that one, and it's still running, it's still open. It will reverse, because that's what I'm saying, it will reverse. From staring at charts for many years, it will reverse, but at the moment you can see what I'm watching now is the continued decline in the stochastics, and just staying there. I may close the final bit if we get a green candle on this pair. Have we had a turnaround in the lower time frame? So if we go down to the 2 minute time frame, are they all still red? Well, we're getting at the moment the 806 one has turned a bit green, so maybe showing signs of fatigue down here at the bottom. Where are we? Well, look where we are. We're at 24,950 or 55. So we're at fives, and 50 is just it's here. So we've hit 24,950. So again, a lot of programmed automated systems will be set around about 950. And that's why we've closed out there. But this is the 2 minute chart, isn't it? We would have got in earlier with the 2 minute chart. That is now our trading time frame. It's 5 minutes, so we've got to wait till the candle completes. And that's what I was saying about when you're trying to do this, or when you do this manually, and you do this live, 5 minutes, even 2 minutes can seem an awful long time. So let's go down to the other extreme. Let's go down to the 1 minute chart and see if we've had a green. So here you can see it's much choppier. Obviously, we get many more signals, but less. You move less further, as with all shorter time frames. Much more noise, but it all depends on what you like, how you like to trade, doesn't it? So this one's already gone overbought. It got a signal there. The clean signal, you can call it a clean signal, was here on the movement. So we had to wait for quite a while as the first touch kept going up. Looked like it was going down there. That would have been a failed move. It gone against you, stopped you out. Got to be quick, obviously, when you're there's the pre-market high at 731, and then we moved low. So that would have been your clear. On the 1 minute chart, you would have got in there at 733. We didn't get in until 745 on our 5 minute chart, when this one had already hit its second target, already gone across to the other side of the Bollinger Band, and it was flattening out. So we'd given up on that. But then, as you can see here, this is when the trend can overtake the mean reversion on these short time frames. The trend continues to decline into the opening trades, and it's moved down. So it's a bit of a messier one, isn't it, here on the 1 minute? So going to the faster time frame hasn't benefited us here, which is why I prefer the 2 and the 5, to be honest. But there we go. Our 2 minute has had a completed first green candle. So you could have closed your final 20% there on that green candle, because we got to why did we get out there? Well, it's a key round number, 24,950, and it's our first green candle for a while. They're not going to continue to be red all the way down. There will be some sort of hesitation. It was our first stall. If we go up to our 5 minute, which is our preferred trading time frame, we're still, this is still red and it's still moving lower. We have we've tested as low as 24,940, so perhaps 950 isn't going to hold. But at the moment, we still got 20% on there. Our stop loss is here, and we're just happy to wait because our stochastics are still moving down. There's still a bit of distance, momentum for this to take it down before it hits the overbought area. And that's how to trade with this very, very simple mean reverting strategy. It works quite effectively, particularly on the DAX, the NASDAQ, and the Dow. Less so on the FTSE and the S&P. But try it on whatever market you like to trade, my friends. It does work, and it works well enough. It's all about measuring your risk is the key thing. So if European stocks are down, Has the dollar bounced up? Didn't look like it had. How's gold started the European session? Well, back on its front foot. We were short this last night, as I said. So here again, there's the touch of the outside of the Bollinger Band. We're still going down at that point, but it's enough to get us out. Certainly, if we could have got out there, so we've given some of that back, but that's gone long here and then gone against you. If you had your stop loss here and not at the bottom of that wicket, that would have stopped you out. But we're still moving higher, 37. So as I said, we got on an end of day basis, we're out of the money at the moment, I think. We went long this last night, and I think we're still out of the money. I can't remember what price we got filled last night. Let's see if I can remember it, because there's obviously some trading platforms are a wee bit different. Around about it wasn't 4 o'clock, it was 9 o'clock, wasn't it? It's that. Yeah, so that was 50. No, it wasn't. I didn't get filled at 50.55. I remember that 5,055. I thought it was about 12. I'd got filled. Can't have been that long, or was it? Candle lights on 21 candle. Perhaps it was later. Perhaps it was. No, that says that's the 11 o'clock candle. That's the 10 o'clock candle. Oh, that's why. Where's the 10 o'clock candle? That's the 9 o'clock. And that's the 23. So it was between those two. I got filled in the 10 o'clock candle. And you can see there we are, on the vagrancies of some platforms. See, that says 9 o'clock, and then this jumps to the 11 o'clock, and then that's the 1 o'clock candle. So different. My actual trading platform I took this was, so it must have been halfway between these two candles I got filled at 20. It wasn't 20, it wasn't even that high. Perhaps it was. I'll have to go, and it's not, workstation's not on at the moment, but anyway, we were long from end of day last night on gold. So let's just on this platform, it would have been sort of up here even higher at 20, 50, 60. Certainly, well, I didn't get filled at that price, but just for nomenclature here, let's say 50, 60, we got filled here on this gold long from last night. As I say, it's a set and forget situation. First target, as we said, 51, 41, 51.40. That's 61.8 fib. Could easily turn around that one. But anyway, that's gold. So let's just go back to our DAX position, and then if there's nothing else, guys, I'll wrap this up and see you tomorrow for non-farm payroll. There we are. That's reversed to our stop loss. So if we hadn't have taken it out at that 29.50, or we'd this had been green for a while. But there we go. Successful trading the open before the turn. And as I say, we're literally only 10 minutes in. We went down. Now we're reversing. Many people, wait 15 minutes, don't trade the volatility of the open. And take off pips like we might have done there ahead of having triggered ahead. But you can see here, it was a nice short here in line with the rules, and then a nice long here from 6.45, target 1, target 2. Then it got, certainly would have got out there where the stochastics have crossed, even though we're in the overbought area. And we're short. Obviously, the stochastics are still moving down, but it's a big, significant candle, and we pulled our stop loss down tight, so we stopped out anyway. So this might reverse again to the downside, but it doesn't look like it, does it? This 5, 10, 15, 25, 30, 35-minute continual momentum to the downside from the pre-market high here at 7:30 to this low at 5 minutes past the open is over, and we reversed and topped out, but it doesn't matter, does it? We made 50%, made a 30% there, and a final 20% from our entry up here. So thanks very much, and off we go for the day, or take another trade. So, I mean, it's up to you. Set for the day if you've got enough. That's enough, and away you go. So sorry, I was just mixing my porridge. I'm going to be hungry now. So anyway, I'm going to leave you now. There's no more questions, and I will see you all tomorrow for non-farm payroll. Have a safe day. Watch those retail sales numbers later on out of the US. The key number is the core number Obviously, the caveat with reaction to the market, all of these are late. As I say, these are a month late, so it's very backward looking. So unless these are monumentally different to what I expect, don't expect much action on that numbers. But remember, with high impact events, players in the market could have already scheduled some sort of action around the news that's coming out. So there could be a skew in something that doesn't make sense to the data that's coming out, and sometimes that's some players, big banks, big insurance companies, hedge funds doing something they need to do and hiding it in the news that comes out. Most news, key news of the week, or everybody's headline news, is the week late or five trading days, 5 working days late earnings numbers out of the United States. As I said yesterday, interestingly, that's gone down from yesterday at 66,000. The expectations last time I looked on the Reuters poll was a full revision perhaps for tomorrow. 70,000 being the consensus. That slipped to 66,000. Perhaps comments from Hassett has done that this morning. The range 135,000. I think that was Citibank. I meant to look that up yesterday when I said this to you, didn't I? And the lowest is Standard Chartered with a decline of 10,000 for the monthly on-farm payroll data. So all will be revealed tomorrow, and then Friday is the key PCI data as well. But that is also a week or so late. It's only 2 days late. It was supposed to be tomorrow, so that's been shoved back to take over non-farm payroll. So that's 2 days late, the CPI data on Friday. So I'll see you for those 2 key events of the week later in the week. So take care, be good, and I'll see you all tomorrow. All the best, everyone.